Tenant screening is the single most important step in protecting your rental property and your cash flow. Tenant screening, when done correctly, can be the difference between a profitable investment and a financial nightmare. If you're a real estate investor, landlord, or planning to get into rental properties, this is one topic you absolutely cannot afford to ignore. Because here's the reality. A bad tenant can cost you thousands of dollars in unpaid rent, legal fees, property damage, and stress. But a well-screened tenant? That's consistent income, fewer headaches, and long-term stability. In this video, we're going to break down everything you need to know about tenant screening, from why it matters, to step-by-step processes, to real-world tips you can start using immediately. Let's start with the basics. Tenant screening is the process landlords use to evaluate potential renters before approving them for a lease. The goal is simple: minimize risk and choose tenants who will pay on time, take care of the property, and follow lease terms. Now, a lot of beginner investors make the mistake of rushing this process. They get excited to fill a vacancy quickly, especially if the property has been sitting empty. But rushing tenant screening is one of the most expensive mistakes you can make. Think about it like this. Losing 1 month of rent is frustrating, but dealing with 6 months of missed payments, property damage, and an eviction process? That's a serious financial hit that can wipe out your profits for the entire year. So what does effective tenant screening actually involve? Let's break it down step by step. First, it starts with the rental application. Every potential tenant should fill out a detailed rental application. This isn't just a formality, it's your first filter. A solid application should include full name, social security number or ID, employment information, income details, rental history, and references. You also want to collect current address, previous addresses, and emergency contacts. Pay close attention to completeness. If someone leaves sections blank or provides vague answers, that's already a red flag. Serious, qualified tenants will have no problem providing full and accurate information because they understand this is part of the process. Next comes income verification. A general rule many landlords use is that the tenant's monthly income should be at least 3 times the rent. So if your rent is $1,500, you want to see at least $4,500 in monthly income. But don't just take their word for it. Always verify income with documents like pay stubs, bank statements, or employment letters. You can also call the employer directly to confirm job status and income stability. For self-employed tenants, ask for tax returns, bank statements, or profit and loss statements. Consistency matters here. Look for stable income, not just high income. Someone making fluctuating income without a clear pattern can be riskier than someone with steady, predictable earnings. Now let's talk about credit checks. A credit report gives you insight into how someone handles financial obligations. You're looking for patterns, not perfection. Key things to evaluate include payment history, outstanding debts, collections, utilization rate, and overall credit score. A high credit score is great, but even more important is whether they consistently pay their bills on time. If you see multiple late payments, charge-offs, defaults, or accounts in collections, that's a warning sign. It doesn't automatically mean you should reject them, but it does mean you need to dig deeper and understand the story behind those numbers. Another critical step is rental history. Contact previous landlords and ask specific questions. Don't just ask, were they a good tenant? Instead ask, did they pay rent on time every month? Did they maintain the property? Were there any lease violations? Did neighbors ever complain? Would you rent to them again without hesitation? Here's a pro tip. Sometimes the current landlord may give a positive review just to move a difficult tenant out. That's why it's helpful to contact at least 2 prior landlords to get a more accurate picture. Next is background checks. This includes criminal background checks and eviction history. You want to know if the applicant has a history of evictions, fraud, or serious legal issues that could put your property or other tenants at risk. However, you must be careful and follow fair housing laws. Always apply the same criteria consistently and avoid any form of discrimination. Consistency is key. You should have a written screening policy that outlines your requirements, minimum credit score, income thresholds, rental history standards, and apply it equally to everyone. Now let's talk about red flags. Some common warning signs include incomplete applications, frequent moves within short periods, gaps in employment, unwillingness to provide documentation, and urgency to move in immediately without proper screening. Another major red flag is inconsistencies. If the information on the application doesn't match what you find during verification, that's a strong signal to proceed with caution. Also, be cautious of applicants who try to pressure you into skipping steps. A professional tenant will respect your process. Now, you might be wondering, can you automate this process? The answer is yes, and many landlords do. There are tenant screening platforms that can run credit checks, background checks, eviction reports, and even income verification in one place. This can save time and help standardize your process. But even with automation, don't remove the human element. Speaking with applicants, verifying details manually, and reviewing everything carefully still plays a major role in making the best decision. Let's shift gears and talk about legal considerations. Tenant screening must comply with the Fair Housing Act. This means you cannot discriminate based on race, color, religion, sex, national origin, disability, or familial status. You also need to follow rules regarding credit checks and consumer reports. If you deny an applicant based on their credit report, you may be required to provide an adverse action notice explaining the decision. This is why having a consistent and documented screening process is so important. It protects you legally and ensures fairness across all applicants. Now let's discuss how to create your own tenant screening criteria. Start by defining your minimum requirements. For example, you might require a credit score of 620 or higher, income at least 3 times the rent, no prior evictions within the last 5 to 7 years, and positive landlord references. Write this down and stick to it. This creates a repeatable system and removes emotional decision-making. Another important strategy is pre-screening. Before scheduling a showing, ask a few qualifying questions. For example, what is your monthly income? When are you planning to move? Do you have any prior evictions? How many occupants will be living in the unit? This helps filter out unqualified applicants early and saves you time. Now let's talk about pricing your rent. Pricing directly affects the quality of applicants you attract. Comment inside it on the sound. If your rent is too high, you may limit your pool and increase vacancy time. If it's too low, you may attract a larger volume of applicants, but not necessarily high-quality tenants. The goal is to price your property competitively based on market data. This allows you to attract strong applicants and gives you multiple qualified options to choose from. Let's look at a quick example. Imagine you have 2 applicants. Applicant A has strong income, a 720 credit score, stable employment, and excellent rental history. Applicant B meets the minimum requirements but has a few late payments, shorter job history, and limited references. Even though both qualify, applicant A is clearly the lower risk choice. Tenant screening is not just about approval, it's about selecting the best possible tenant. Now, here's something many landlords overlook: communication. Pay attention to how applicants communicate with you from the beginning. Are they responsive? Do they show up on time? Do they follow instructions when submitting documents? These small details often reflect how they will behave during the lease. Also, set expectations early. Be clear about rent due dates, late fees, maintenance procedures, and lease terms. Clear communication up front reduces problems later. Another advanced strategy is using a scoring system. Assign values to each category like credit score, income level, rental history, and references. This creates a more objective way to compare applicants and helps you make consistent decisions. Now, let's address a common question. Should you ever make exceptions? The answer is yes, but with caution. For example, a tenant with lower credit but strong income and excellent rental history may still be a solid choice. In those cases, you can reduce risk by requiring a higher security deposit, a cosigner, or shorter lease terms initially. But avoid making too many exceptions, because that weakens your screening process over time. Let's also talk about timing. Strong tenants move fast. If your process is slow or disorganized, you may lose high-quality applicants to other landlords. That's why you want a system that allows you to review applications, verify information, and make a decision within 24 to 48 hours. Speed combined with thoroughness is what gives you an advantage. Now, what happens if you skip tenant screening altogether? This is where things can go very wrong. Without proper screening, you are essentially gambling with your investment. You could end up with tenants who don't pay rent, damage the property, create legal issues, or require eviction. Evictions are expensive, time-consuming, and can take months depending on your state. That's lost income, legal costs, and added stress. That's why tenant screening should never be optional. It is a core part of running a successful rental business. Let's bring this all together. Effective tenant screening involves collecting detailed applications, verifying income, analyzing credit, checking background and eviction history, reviewing rental references, and applying consistent criteria every single time. It's about reducing risk, protecting your asset, and creating predictable, long-term cash flow. The more disciplined you are with tenant screening, the more stable your rental business becomes. And over time, that stability is what allows you to scale and grow your portfolio confidently. So, if you're serious about real estate investing, take the time to build a strong, repeatable tenant screening system. It may take a little more effort up front, but it will save you thousands of dollars and countless headaches down the road. And if you found this video helpful, make sure to subscribe to the channel for more real estate investing strategies, tips, and breakdowns designed to help you grow your portfolio smarter and faster. Also, turn on notifications so you don't miss upcoming videos where we break down topics like DSCR loans, cash flow strategies, and how to scale your rental portfolio step by step.